Yeah, thanks very much for having me in this International Investment Forum. I'm Roland Rapelius, Head of Investor Relations and Corporate Communication at DB AG. And I'm here to guide you through our presentation, give you an overview about Deutsche Beteiligungs AG, what we are doing, what our focus is, how we differentiate from competitors, and also tell you a little bit about our forecast for the current fiscal year, which ended in September 30th. So we're right now in the process of preparing our reports. First of all, the business model of DB AG. DB AG is a listed private equity firm that creates value in two divisions. Firstly, it's the private equity investments segments. Here we use our own balance sheet with a high equity ratio of 95% to invest in portfolio companies. We either invest alongside the DB AG funds or for up to 5 years, or we invest independently of the DB AG funds for a period of longer than 7 years. On the right-hand side, you see our second segment. It's the fund investment services segment. Here we act as an advisor to the DB AG funds, and we earn a management fee on the capital. And accordingly, the analysts that follow us value our stock using a sum of the parts model, incorporating a value for both of the divisions. Then, having spoken about our business model, I would like to share with you 3 slides. I would rather make it quick. We have recently announced a partnership with IIF Capital, and that for us is a significant step. We have agreed a strategic partnership with IIF Capital. IIF Capital advises funds providing flexible private debt financings, and that's a strategic entry here for DB AG. It's a significant further development, enables us to offer financing solutions now across the entire capital structure, not only equity, but also debt. We have a common focus on mid-market companies. The asset class private debt is increasingly attractive. And I'm sure you know that debt funds are playing an increasingly attractive role, and they're taking market share from banks. We are, with the partnership, extending our network to mid-market companies and driving our own growth. And we're enhancing capital formation capabilities. And last but not least, we are stabilizing earnings as well, because the debt fund business also generates a fee income. Here's some information about IIF Capital. What are the key highlights? It's a well-established European credit specialist, ELF, European lending fund, with a tier 1 Frankfurt-based team. Very good singular skill set, strong track record, I mean, you can take the points of the slides, I guess. One thing maybe to highlight is that ELF is following an all-weather strategy, applying best-in-class risk underwriting, and downside protection is also something that's in their focus. The leadership team is very experienced. It's Christian Fritsch and Florian Wimpf. Both have a very long track record in the private debt market, and also very importantly, that the corporate culture is fully in line with the corporate culture of DB AG, and that's, we believe, a very important factor for the success of that strategic partnership. And both are focusing on mid-market companies. Now, this is the offering of the combined entity DB AG, and including the new strategic partnership with IIF Capital. You see that on the 3 columns on the right of the slides are the offerings of DBAG. These are mainly management buyouts alongside the GBAG funds, which I've described already on slide 1, with an equity investment of 40 to 220 million euros. The sweet spot being in the range of 40 to 100 million euros, a holding period up to 5 years, and mainly majorities, i.e. management buyouts. Long-term investments I've spoken about briefly. These are the investments we do entirely using our own balance sheet. And then small management buyouts. This is our ECF fund family, focusing on smaller to mid-market companies with ticket sizes of 10 to 40 million euros. And now private debt, also here the focus on profitable companies, regional-wise, focusing on the DACH region, Germany, Austria, Switzerland, with a main focus really on Germany, credit investment volumes between 10 and 50 million euros, and also holding periods 5 to 7 years. Now, having spoken about our new strategic partnership, which is really the latest event that happened here at DBAG, I would like to draw your attention back to our core market, the private equity market, or the market of which we have been active in since 1965, and as you know, our company IPO'd in 1985. So this is a market we know very well. On the left side, you see the market development over the long term, with the number of MBOs and the transaction volume, and it's a structurally growing market. And it's also a healthy market. As you can see, the share of primaries, these are transactions that are where the seller is really the founder or the family of a mid-market company. That share of primaries in 2022 stood at 67%. This is a much higher share compared to other more developed private equity markets. And that share has even increased from 2013 when it was only slightly above 50%. So we see a structural increase here, a structural shift towards more primaries in Germany. On the right-hand side, you can see data coming from our CRM system. These are the number of transactions we get on our desks to look at, to analyze. And you can see that on average, it's between 200 and 300 million transaction opportunities, investment opportunities we're analyzing per year. And you can also see the impact here of the interest rate, the change of the interest rate regime in 2022, which had clearly had an impact on the number of transactions in the mid market. It's not only Germany; it's also here, including all the regions we are looking at. But clearly, it had an impact on the number of transactions. And now you can see in 2023 that these numbers are going up. That said, what we are seeing, if you look at the number April to June 2023, for example, these 61 transactions are 5 long-term opportunities and 56 MBO opportunities. Out of the 56 MBO opportunities, the majority is really on the smaller size. And so that means that the larger sized MBOs are still significantly behind last year. That's one takeaway here. Now I would like to share with you a slide regarding the first 9 months of our fiscal year, which we have published already. And you can see that we've been quite active on the acquisition side. We have signed 4 new investments in July, and that's really these are really attractive and growing sectors. AOE Group is an IT service and software sector company. Avrio Energy is a biogas producer, and so it's really in the renewables space. Nokera is a producer of homes in a highly standardized and highly scaled operations. The picture you're seeing here, that is really an existing plant. It's several hundred meters long. It's in the Berlin-Brandenburg area. So addressing the housing need in Germany using sustainable materials based on wood. And TBG is a service company active in the renewable space. So these are our 4 investments we have reported in July this year, and which also evidences that the smaller mid-market segment is fully intact in Germany, whereas the larger sized transactions are still lagging behind, like I said before. On the bottom of the page, you see our disposals. We had 6 disposals in the first 9 months of the current year, which also shows that basically, which evidences that we have a very attractive set of portfolio companies, and we were able to achieve for us favorable selling prices. BTV Multimedia, it's a broadband telecommunication, Cloudflight, IT services software, Hightex, and PM-Flex from the industrial sectors, GMM Pfaudler, we did a partial disposal, and R&S Group, it's also a technical, it's a supplier to Gebäudeausstattung. Now, let me go on with the next slide. We also active in building our existing portfolios through add-ons. And in the first 9 months of the year, we did 14 add-on acquisition. So we are quite active here. And that is a way for us to grow in a very low risk way, because add-on acquisitions are typically done at platform portfolio companies that are well established, where we have a good management team, a strong management team, and with a relatively low risk, we can make the companies bigger and more valuable through add-on acquisitions. So we've been quite active on this in this field as well during the first 9 months. And also, it compares to 91 add-ons we did during the last 7 years. And here you can see that's really one of the main pillars of our value creation strategy through add-on acquisitions. On the next slide, it's also going back a bit more to the structure of our portfolio and how it has developed strategically. On the left-hand side, you can see that IT services and software has increased fourfold over the last 3 years, from 5% of portfolio value to now 20% of portfolio value. Broadband telecommunications has declined. That was also driven by successful exits from that sector, for example, BTV Multimedia. Therefore, it has declined. Industrial services and industry technology in some basically stayed very much unchanged. And if you ask me going forward, what is the targeted structure of our portfolio? You cannot, on the percentage point, forecast how the portfolio will look like, because one divestment or one acquisition would make an impact here. But more or less, we feel very much comfortable with that balanced portfolio structure. On the right-hand side, you can see the valuation of our portfolio vis-a-vis the acquisition costs. We are marking to market our portfolio value on a quarterly basis, and the IFRS value, this IFRS value divided by the acquisition cost, now stood at 1.1 times in June 2023, at 30th of June 2023, which is just showing you how relatively low it is valued vis-a-vis the acquisition costs. And also, if you look at the typical multiple we receive, if you look at our track record of exits we've done in the past, This is more towards 2.5 times for our MBOs. So we believe there's room for upside here, and that shows the investor the current valuation of our portfolio. On the next slide, we're showing our market position we have in Germany, and you can see that DBAG has a #1 market position. It's the market leader in this market by the number of transactions, and competitors over, and that's a long-term perspective here. That's a 10-year perspective. In the 5-year perspective, it looks pretty much the same. So DBAG is the market leaders, and competitors are 2 groups basically. There's one group focusing on the German-speaking regions, and these are unlisted companies typically, and then there are pan-European funds in our competitive environment. And on the right-hand side, the one key message is that DBAG has a higher share with families and founders as sellers of companies compared to the broad market. So, and if we would look back now at the transaction we've done this year, most of them were also from families and founders. So we see like I said earlier, there's an increasing share of families and founders coming in as sellers of their company, and DBAG is the natural partner, the go-to partner for these kind of companies. On the next slide, there's some information about our offering. I've talked about that before on the slide showing our partnership with IIF Capital. So it's pretty much the same message here. You cannot go to family-run or family-owned business and say, look, this is our solution. We offer MBOs and that's it. You have to be really flexible and really adapt to the needs of the company owner, what he's looking for and what his financing needs are. For investment case, that's maybe something to highlight for those of you who have not met with DBAG before. DBAG is investing in companies with strong market positions, so healthy companies with value creation potential, with potential to increase the value. By regions, we are focusing, like I said, on Germany, Austria, Switzerland, and also on Italy. This is northern Italy here, where we have put our focus. By sectors, we've talked about the sectors we're looking at here: German unlisted companies from diverse sectors here, industrial sectors and growth sectors, well balanced, and management teams. Also a very important factor for us. We're looking for entrepreneurial management teams, because in an MBO, the manager is always invested alongside the financial investors. So there's a high alignment of interest between the investor and the management we're looking for. This is a fact. On the next slide is an overview of our investment advisory team of 33 senior members plus 2 board members. So that picture shows 35 people here, and it's a very experienced group of investment advisory team members. You have the senior members have 17 years of average private equity experience, and experience is hugely important in this business. And also alignment of interests, also here for investment team members, is hugely important. The combined co-investment of all of the senior team members on this slide is 25 million euros. So there's a huge alignment of interest between the investment advisory team members and DBAG and the outside investors. And that alignment of interests is, I would say, it's a fundamental aspect of the private equity business as a whole. What is not on this picture here is our executive circle. DBAG has an executive circle. That's a group of senior partners, senior advisors, former C-level board members of our portfolio companies who are sourcing deals, who are chairing supervisory board positions in the portfolio companies, and who are hugely valuable for DBAG. Yeah, then I have some slides regarding our 9-month figures here. The NAV, which is really the key figure we're looking at, has increased by 20% over the first 9 months, and that's adjusted, of course, for the dividend payment. And we have specified the initial forecast now at the upper half of the range of 610 to 750 million, and that's driven by positive value contributions from change in multiples, but also from the transaction effects and changes of earnings assumptions or earnings forecasts of our portfolio companies. So a very positive development here in the first 9 months, the plus 20%. The second segment is our fund investment services segment. This has basically, in the first 9 months, developed as planned. Top line has increased from 32 to 35 due to increased investments in our portfolio companies, planned investments in our portfolio companies, and the bottom line has increased because last year we had a one-off effect of 2 million euros. These were personnel expenses due to the departure of a board member, and these one-off effects do not occur this year or have not occurred in this 9 months period. So therefore, we have an increase in the bottom line. Relatively good to forecast this segment. This slide shows a longer-term development of our AUM and our net asset value, and you can see that our AUM, typically when we launch a new fund, that's the upper left of the slide, typically when we launch a new fund, there's a step change, and that happened in 2016 vis-a-vis 2015. A new fund was launched. That was the Fund 7 back in 2016. And then we had the DBAG Fund 8. This is our current flagship fund, which was launched in 2020, started its investment period in August 2020. So that led to the step change from 1.7 to 2.6 billion AUM. And then after that, the AUM typically declines slightly step by step because of the planned divestment. That's the typical pattern of the AUM development. With respect to NAV, taking the 21-22 year, the average growth was stood at 9%, but going forward, we are targeting 14 to 18%, and we are already well into the 22-23 fiscal year with our 20% growth over the first 9 months. And growth drivers are clearly the existing portfolio of our 35 portfolio companies. As of June 30th this year, it's the co-investments alongside the GBAG funds, and it's our long-term investments and the value creation we are seeing there. Coming to our forecasts, we have specified our forecast, and with the release of the 9-month figures, we have confirmed that specified forecast. It was specified at the upper half of the range for NAV and for group net income. And fund investment services, like I said, 13 to 50 million we are targeting here, and that's basically the figure we are still expecting. So to sum up, really, DBAG is a well-established platform for growth. We had good additions to the team. We have not so long ago expanded the equity solutions, including long-term investments, and broadened our regional focus to Italy only for a few years. And given the long-term nature, I'm saying that because the nature of our business is rather long-term. The closed-end funds have a lifetime of 10 years. And so therefore, this is a relatively new aspect to DBAG. On the right-hand side on the top, you can see that our portfolio offers a significant potential for value appreciation. And we've talked about the current valuation of our portfolio at 1.1 times the acquisition costs only, with a more balanced structure, with a higher share of IT services and software, which we have increased from 5 to 20%. And we have a good track record also with already good exits within this IT services and software sector. So we are well established there. And all in all, our financial basis is very sound for the targeted growth. What is most unique about DBAG is the strong reputation and the track record. Like I said, founded in 1965, IPO'd 1985. This track record is not, it's not possible to replicate such a track record for a competitor. And that basically sums up the presentation. Thanks very much for your attention, and I hope we have a few minutes left, Matthias, for a few questions.
Thank you very much. Yes, we still have 3 minutes left for questions, and some already came in. So is Italy a new investment focus for the coming years, or and what kind of percentage would you put into Italy?
Yeah, that's a very good question. Thanks for that. Italy has been very successful for us. We started there in 2020, have built up a team in Italy, and we are very happy with the performance of the Italian market. It could well be 20%, maybe a bit more. Like I said earlier, it's hard on the percentage to focus really a single percentage points when you have such a chunky business with larger companies coming and exiting from the portfolio. But 1/5 could be a good figure there. And yeah, we've done very successful transactions there, like PM Flex, which we exited this year, which we realized as an investment in only slightly more than 2 years. We more than doubled our money, or our invested money. So it was a very, very attractive a transaction for us. And the buyer was a strategic buyer. It was Hager Group, a family-run €1 billion company. It was their first really that large acquisition. It was the largest acquisition ever. And for them, it made tremendous sense to acquire PM Flex from DBAG, because it helped them to significantly accelerate their market development in certain regions where PM Flex had a strong position. Metalworks Holding, MTWH, I showed you earlier a slide. That's a supplier to the luxury industry, which Italy is famous for. We have only recently announced an add-on acquisition, which basically doubled that company in sales. So it was a significant add-on acquisition. And more generally speaking, the Italian market is attractive because there are a lot of family-owned and family-run businesses there. And that's very similar to the structure of the German Mittelstand, of the German mid-sized companies with a lot of family-owned businesses. So therefore, it is a very attractive market for us. And we have not spoken about Italium. Italium is a company where we have invested in. It's a company that is in the circular economy. So it's also, we're very happy with that investment, and we're very happy with the team. So all in all, a very good step for DBAG, which was planned several years in advance. So we didn't just quickly jumpstart it. We looked at the market for several years before we set up an office in 2020 in Milan.
Okay, so the time is up. Thank you very much.
You're welcome.